Welcome to ABCs of Business. Always be compliant. Brought to you by ILSA, Insurance Licensing Services of America. And now here's your host, Doug Foresta.
Hello, you're listening to the official podcast of ILSA, Insurance Licensing Services of America. This is Doug Foresta. Today with me are ILSA's very own Tameika Johnson and Mayra Feregrino from the tax team. And between these two ladies, they have over a decade of experience. And we're going to talk about what triggers corporate tax returns and annual returns filing requirements. So Tameika, maybe to start with you, just what your title is at ILSA?
I am the Annual Returns and Corporate Tax Returns Department Supervisor.
Excellent, thank you. And how about you, Mayra?
I am the Annual and Corporate Department Team Leader.
Today we're going to be talking about what triggers corporate tax returns and annual returns filing requirements. And I thought maybe we could start with this. First of all, I guess the first question would be, what does trigger corporate tax returns and annual return filing requirements?
Well, normally after an agency obtains its license from the Department of Insurance, it is required to register with the Secretary of State. You're registering for your certificate of authority to do business in that state. So this can trigger an annual or biannual report filing requirement with the Secretary of State, or it can trigger a corporate tax return filing requirement with the Departments of Revenue.
Thank you. And I know that one of the things we're going to talk about as well is the state corporate tax return filing requirements with the Department of Revenue. Can you say a bit more about that?
Well, with corporate tax returns, one of the main triggers for the tax filing requirement is when you register with the Secretary of State for your certificate of authority, but it's not the only way. And every state has its own definition of doing business. And also, the agency's corporate structure and how the agency is registered with the IRS can determine if they are required to file in certain states. So most states go by the agency's fiscal year to determine the due date. So an agency should always consult with a tax professional or an attorney before they register with the Secretary of State. Mayra's going to explain the annual returns.
So I'm going to go ahead and explain that. After you register with the Secretary of State, the Secretary of State often requires that every agency conducting business in the state become qualified or registered. When an agency is registered, you are required to file an annual or biannual report, which lists your officer information, business information, shares information, registered agent, etc. These reports are filed on an annual or biannual basis. The state may change fees of the filings of the returns. Failure to file a return in a timely manner can result in penalties and fees, loss of good standing, or revocation of certificate of authority to do business.
Thank you very much. I know the next topic we're going to talk about is the winding down a business and the DOI license cancellation and withdrawals. Can you say a little bit about that? And maybe, Tameika, we could start with you.
Yes. If the agency goes out of business, it will need to cancel its licenses with the Departments of Insurance, and also it will need to withdraw from the Secretary of State. And the reason is, even if your license is canceled with the Department of Insurance, since you're registered with the Secretary of State, the state still is going to expect, if it's required, an annual or biannual return filing or a tax return, because you're still saying that you're doing business in there. So you have to cancel the license and also withdraw.
And what happens if you fail to do that?
Well, the Secretary of State will still expect to have the annual returns and the biannual returns filed with it, and the Departments of Revenue will expect their taxes until you close those accounts up.
So that's a huge takeaway then for our listeners, that it's really important. Do you find that this is something that people don't think about when they're winding down a business? Like, do you find that people, obviously we won't use any names to protect the innocent, but do you find that this is an issue that comes up?
Yes, it comes up quite a bit. And also you can have an agency, let's say they apply for a license with the Department of Insurance, and the state requires, let's say that this particular state requires that you set up your certificate of authority with the Secretary of State before you can get that license. Well, sometimes the agency, they change their mind and decide not to go through with the license, but they don't take out the certificate of authority. And so those filings are still expected. And so it kind of catches them off guard because they're thinking, I canceled my license with this one department that should have done it.
Thank you. Can you say a bit about also the SOS and DOR corporate compliance reviews?
Well, this is Tameika. Well, basically, it's an audit. We would check to see if you have an active license with the Department of Insurance, and we also check your status with the Secretary of State to see if you're up to date with your annual report filings or your biannual report filings. And also, in some states, if you're not in good standing with the Department of Revenue, that can hurt your status for your certificate of authority. Now, if we do a Secretary of State and Department of Revenue audit, then obviously we also on the Department of Revenue side be checking to make sure that you have paid all your taxes and you're in good standing with the Departments of Revenue. Also, something else to remember, like with reinstatements and withdrawals, if the reason why that you need a reinstatement is that you owe late tax returns, then you will have to file the late tax returns in order to get in good standing. And also, like with withdrawals, there are some states that require a tax clearance, and some states can require more than one. So in both those cases, you still have to if you have late filings that are due, you have to get those filed in order to either be reinstated or to get your withdrawal.
The next thing that we're going to talk about, I know, is the DOR business tax registrations. Can you explain that and say a little bit more about it?
Yes. Some states require that you apply for your tax account in advance. Some states, once you file your tax return, they'll automatically set it up, but not everyone. So basically, in the application, you're just telling them what your corporate structure is, how you file your taxes, whether you're an S corporation or a C corporation, and basically you do that before you start filing taxes. So some states it's a requirement; they won't automatically set it up.
I'm wondering if either you, Tameika, or Mayra, or perhaps both of you, have some examples or stories about these topics that we've covered.
Yeah, we had one company that accidentally registered in a state and claimed that the state was their domicile, and actually they should have registered as a foreign agency. And what ended up happening was that their tax returns end up being filed on another company's record, and so they end up having to basically get another certificate of authority and kind of had to go to the Department of Revenue in order to try to get that account corrected, because try to get it moved, because they were saying that they hadn't filed their taxes, and they actually had.
Oh boy!
So it's very important that the states have different forms, and it's very important that you're reading it and that you're using the forms. It could be foreign, domestic. It could be going by what your corporate structure is. You have to read it, so otherwise it can mess up your filings.
Thank you. Yeah, that's again a really important takeaway for listeners, that the little things are the big things, right? The details matter. Mayra, how about you? I'm wondering if you have any stories from what we've discussed.
Well, there is a couple of states that if you fail to file the annual or biannual report, you'll have to register the business or get a brand new certificate of authority in the state, because once you don't file it, your agency's revoked. So that can cost the company money of getting a brand new certificate of authority.
So I'm going to just say this, that it sounds like part of what you're saying here is that it might be worth it for me to think about investing in some help with these issues in order to avoid some of the costly, in other words, like, I guess what I'm thinking is you can pay now or pay later in terms of.
Yes, it's very important, yes, before you register with the Secretary of State, that you either speak to an attorney that specializes in that or a tax professional, because once you register, then they're going to start expecting these filings.
My next question for you, as I said in the beginning, I know that you both have a lot of experience. What is the number one thing that you think or you'd like to see people consider before they get this ball rolling that perhaps they don't often consider?
They basically need to keep in mind that it's not just about the Department of Insurance, that there are other departments involved, and they need to think about the Secretary of State and the Department of Revenue, and that once they start doing businesses in that state, about the requirements that are needed in advance before they especially before they register with the Secretary of State, as you start thinking in advance about the consequences of registering with the Secretary of State, and to keep in mind that the other departments also have requirements.
I am sure that you must find yourself oftentimes cleaning up other people when people come to you, but it's a little bit later, right? After the fact, and you find yourself cleaning up messes.
Well, say like you have us do a corporate compliance review. Basically, yes, a lot of the times when people come to us, it's because they're revoked or they receive a notice from the Department of Revenue, and it's already after the fact that something has happened. That's usually when they come, and that's when they kind of end up figuring out, this state requires an annual return, or this state requires a tax return. It's usually when it's kind of too late, but it's possible to rectify the problem, of course. But it's one of those things that a lot of times they have a whole bunch of licenses and they've already registered with the Secretary of State, and it's more than one state that they need to be tracking, and they didn't realize that.
Thank you so much, Tameika. I'll leave it to you and give you the last word. Anything else that you want to share with listeners before we close?
One of the best reasons to work with someone like us, like even if you're handling the issue in-house, you can still provide guidance and let you know what to look out for and what to expect, around the corner. Like you may not even want us to handle like everything, but it just could be, certain things that you just don't want to handle, like DBA renewals or something. Like you can handle the annual returns, but you don't want to handle some of the other things that also affect it. Tameika Johnson, Mayra Feregrino, thank you so much for joining me. I really appreciate it. Yeah, no problem. Thank you, Doug.
No problem. Thank you.
These materials are designed to give general information on the specific subjects covered for discussion purposes only. They are not intended to be a comprehensive summary or exhaustive treatment of the subjects covered. These materials and the related presentation do not constitute legal advice or an opinion. You've been listening to ABCs of Business, Always Be Compliant, brought to you by ILSA, Insurance Licensing Services of America. ILSA is the insurance industry's regulatory compliance expert. For more information, visit ilsainc.com or call 254-729-8002. Thank you so much for listening, and we hope you'll join us for future episodes.